Hello and welcome, dear viewers, to a new edition of Investor Calls. Today we present American Lithium. With us today is Andrew Bowering. He is a venture capitalist with 30 years of operational experience and leadership in mineral exploration and development worldwide. He has founded, funded, and built teams that have operated numerous companies in the pursuit of precious, base, and industrial metals from early exploration through production. He has been responsible for the acquisition of sale of several assets and companies and the raising of $500 million in development capital. He's the founder of Millennium Lithium, American Lithium, and several other well-known entities. Welcome, Andrew.
Thanks very much, Martin. Pleasure.
All right, Andrew, please take over.
Thank you very much. I guess I'd like to share the screen. Can you turn on the screen sharing for me?
Yes.
All right. Well, thank you very much. And it's a pleasure to chat with you all today about American Lithium. We're very excited about the lithium space. I don't think I'll spend that much time talking about lithium in general, but I'll definitely get into, what's important about it and why American Lithium is such a strong company. And along the way, I might make some forward-looking statements. We have our precautionary language in our report. If anybody would like to see that, we can send out copies. American Lithium has 2 lithium assets and a uranium asset. We are in 2 stable mining jurisdictions. We are in Nevada, in the US, and in Peru, both very stable, mining-friendly jurisdictions. We have a lithium project called TLC in the US and Falciani in Peru. We also have the 5th largest undeveloped uranium asset in the world in Peru, thanks to our recent acquisition of Plateau Energy Metals. We are well funded with approximately 19 million in cash, great management team, and are going to have a full year of activity. That being said, the last year has been very strong for us at American Lithium. We established a 43101 compliant resource, the 2nd largest resource in Nevada. It's currently 7 million tons of measured, indicated, and inferred, 5.3 million tons measured and indicated lithium carbonate equivalent, and an additional 1.7 million inferred in Nevada. I will get to the Peru assets a little later. We are currently in metallurgical study on the clay stones in Nevada and have been able to mechanically upgrade them, have been able to produce commercial grade or technical grade lithium carbonates now, and are continuing to move along that process. We've completed our environmental baselines. We've secured water rights. We are the only US lithium company, actually the only North American lithium company, to get a US Department of Energy grant to build a pilot plant to produce lithium hydroxides from our clay stones. That grant is in partnership with DuPont Chemical and American Battery Metals. We are #1 on the Venture 50 in mining, and have had a very successful year. Currently have about 176 million shares outstanding, a market capitalization that's about $350 million. Some major institutional shareholders, including Commodity Capital out of Europe, Terra out of Australia, Ausbil out of Australia, Globex and Primevest out of North America. And I guess one of the strongest things that I'd like to say is that this company has over 42,000 US shareholders. And that's important for one reason. This week we started a US registration and a listing application for the NYSE American exchange. We plan on upgrading to a more senior exchange, which we think will bring us increased exposure and increased liquidity as we continue. The team is backed by me as chairman, and for those that don't know me, I've been around for a while. Martin gave you the background, but I'm the founder, one of the larger shareholders and executive VP of Prime Mining. Prime Mining trades at about a 450 million market cap. It's developing a gold and silver asset in Mexico. The largest shareholder of the company now is Pierre Lassonde, and Prime is our flagship company. I run that, and I run American Lithium. I have a new CEO, Simon Clark, that's worked with me for 20 years. Simon came to join me several years ago and started a company called M2 Cobalt, which we sold to Jervois. And as Simon finished his stint with Jervois, he came and joined me here to take over the reins at American Lithium. We also have a very talented COO, Dr. Lawrence Stephan. He came from our Plateau acquisition, an economic geologist that spent 30 years at all levels of the business. Our CFO, very experienced in North American accounting and in Peruvian accounting, Philip Gibbs. And then we've got a couple other technical experts, a chemical expert, Ben Binninger, and a uranium expert, Ted O'Connor. ESG is very important to us. If you don't have happy people on the ground where you're working, then it's difficult to get social license to build mines. We are very supportive of environmental issues and very strong on social and community issues. And what I'd like to say here is that there's some, and I don't want to talk about my competitors, but I'll suggest that that right now there are two of the big three in Nevada, and it's Lithium Americas and Ioneer, and they're having troubles with their environmental issues. There are a couple of endangered species in Nevada. One is the sage grouse, and so its habitat matters to the local communities. The other is a plant called Team's buckwheat. Our competitors, unfortunately, have buckwheat on their properties and sage grouse habitat, and that causes them some complications. The TLC project that American Lithium has no plant life, no wildlife on our property at all. It's in the dry desert, low-lying areas. There are no ranches nearby. It's the perfect spot to build a mine if you're going to build a mine. And I suggest to listeners that that's going to be a very significant development for TLC in the next couple of years. The importance of Nevada to the lithium industry cannot be understated. What's going on in the lithium industry is very similar to what happened in the gold industry. And if you recall, the gold industry, and gold was at $35 an ounce until 1971 and the deregistration of the US dollar to gold, the Bretton Woods collapse, resulted in gold running to several $100s an ounce that decade. During that time, you had the advent of American Barrick, Placer Dome, Newmont, Franco-Nevada, all these companies that came in and built big, low-grade gold mines, big open pit, 1 gram per ton, 1 part per million gold mines because of the price increase in gold. Same thing's happening in lithium. You've had a major increase in the price of lithium in the last 6 years. And as a result of that, the lower grade, broad, wide surface deposits of lithium are going to come into play. And those exist in Nevada. It's a mining friendly state. It's got abundance of infrastructure, and there's no issues with land disturbance. TLC sits 5 minutes out of Tonopah. It's got, as I mentioned, we have all of our water rights. We have access to soda ash from the nearby trona deposits of Wyoming, sulfur from the Gulf Coast, and limestone or dolomite right up the hill from us. So you've got all your basic inputs for a lithium operation. We have drilled off a significant resource. It's potentially bigger, but bigger is not what we need right now. We're now in the process of working on metallurgy. This is a deposit that sits right at surface. And as a result, this will ultimately be a cut and cover mine. Environmentalists like that because you take out, you process, and you put back. The lithium starts at surface. One of the biggest advantages of our TLC project is that our lithium leaches out in 10 minutes. And the slide I'm showing compares to all of the others in the region. And it's very interesting that our lithium reacts so fast to a sulfuric acid leach. And it's just because it's very weakly bonded to the clay stones. The disadvantage, of course, in that is that everything leaches out quickly. And so your flow sheet design requires optimization of your leaching to best get the lithium out without the other deleterious materials. One of the things that's been very successful for us and we believe is a game changer is that we can mechanically upgrade the lithium clay stones. So we take a 1,300 part per million sample and we run it through hydrocyclones, which can be scalable up to 20,000, 40,000 tons a day if required. And we can upgrade to a 2,200 part per million base sample. That's your sample now that you're going to leach. Makes it much cheaper to operate a leaching system. That being said, we are doing a lot of process work on other applications. We have had, if anybody that follows our company knows, we put out news this week on roasting, and we can actually get 82% recovery of our lithium using a simple water rinse after a roast. And so roasting looks like a possibility for us. We're just not that sure yet. All that process work happens this summer. It's likely that if the claystone follows all of the other plans, so Lithium America's plan, Sonoran's plan, then you would have a typical flow sheet like the one I'm showing you here that uses a sulfuric acid leach and then magnesium precipitation, calcium precipitation, and follows all of your typical processes to get to your choice of at the end of the line, whether you're making it a hydroxide or a carbonate. The second lithium project we own is called Falciani. It's in Peru. It's not a claystone. It's a volcanic tuff. It's a glass. It's a very high grade igneous rock, 3,000 parts per million lithium. It also has a 1% cesium credit. It's also got a high potash credit. And this company has had discussions with Albemarle about its cesium. They are the world's largest producer of cesium. They are running low on supply. I think they have 4 years left. And so they're looking for other cesium opportunities. But this project will need to make it on its lithium alone. The company has already done a PEA on this project. The PEA numbers are on the right, and they are exclusive of a claim here called Oca Casa 4. That claim is in dispute from some other parties in Peru. We would love to get it back. As you can see, the numbers are workable without that claim, but there will be a court case this year on this claim. I've been involved in things like this in the past. In Millennial, we had that issue in Argentina 4 years ago. We ended up getting our claims back in federal court. I think that that's going to be the case here. I won't get into this in detail here, but investors are invited to reach out to the company if you want to know more about where the opportunity exists here. I will suggest that we are going to do some exploration work this year and likely try and increase this inferred to an indicated resource, and it adds another almost 4 million tons of lithium oxide to the indicated resource if we're able to convert. I just want to talk a little bit about the cost of the claystone and the volcanic tuffs, and they're in the lower quartile. Nothing gets as cheap as the brines of Atacama. They're 5 times the grade of Argentine brines. They're 10 times the grade of Bolivian brines, and just nothing compares to the costs that are in Atacama and Chile for Albemarle and SQM. But they are having water issues. And the last time that SQM tried to get its production allowance increase from government to go from 230,000 tons to, I think, 300 some odd thousand tons, they were declined because it takes about 1.5 million gallons of fresh water to produce a ton of lithium carbonate. And there just isn't that water available in the Atacama when you're competing with copper miners, indigenous groups, and local communities and wildlife for the water. And so if the demands of the auto industry and anybody that's involved in the electrification of the planet, if these demands, projected demands, are going to be met, there's going to have to be many, many lithium mines built over the several years. And the claystones are likely going to be the biggest component, I think, of that increase because of the cost component. When you get to the spodumene, and so the hard rocks, the pegmatites of Australia, Eastern Quebec, and Ontario, their costs are $6,500 to $8,500 a ton to produce a lithium carbonate out of. They're 60% higher than the projected costs of the claystones, and 2 times to 3 times the costs of brine production. So I think that you're in good stead with the claystones. Our project in Falciani has produced battery grade lithium. We produced 99.75% pure lithium carbonate here. The flow sheet's straightforward, and we are going to take this project through PFS for early 2022. The one other project I mentioned, and I'm just going to spend a couple seconds on it, is Macusani. It's the 5th largest undeveloped uranium asset in the world. We own it as a result of buying Plateau. We don't know what we're going to do with it yet, but you can see the numbers from the PEA that was done on it. They're amazing. We've had a lot of people interested in this asset. We're going to spin it out to the benefit of shareholders somehow, either in a dividend or sell it outright, or look for a partner that will put it into production. We just don't know yet how we're going to deal with it, but I'll suggest that this asset carried a market cap of 120 million all on its own in 2008. We're not getting any value for it right now, and we're going to extract some pretty significant value for shareholders down the road. Again, aggressive exploration in Peru this year, aggressive exploration in Nevada, and it should be a pretty exciting year for us. You'll see a lot of drilling, a lot of met work, and then that culminates in a PEA for TLC in Nevada, a PFS for Falciani in Peru, and we'll see what happens with the uranium assets. We are at the very top end of the measured and indicated resource size, as you can see from this slide, and at a very low market cap for our tons of for our enterprise value, per ton. And if you think about what I said earlier, and that this company's planning on trying on a more senior uplisting, and by the way, we meet the relisting requirements for the senior exchange I'm talking about in all categories except for price. We'll need a $2 US share price, but we expect that we would see that in the as the lithium stocks come out of this consolidation that they've been having over the last 4 months. And so here we are in market cap. There's your 2 that trade on the NYSE. Neither of them have production yet or revenues yet. So you can see what the value gain, I guess, is by getting on a more senior exchange. I am convinced that American Lithium is going to be a producer of lithium in the next 4 years. And so a more senior listing makes a lot of sense for us. So again, I'll just remind you all that we have two very large advanced lithium projects, an extremely large uranium asset. We're in enviable locations we have written here, and Nevada's, you couldn't pick a better spot to work. Peru's ranked #2 in emerging markets for mining. You can expect to see our plan of operations approved soon, a lot more drilling to come to expand a high-grade resource, a PEA and following on feasibility in Peru, PFS, feasibility next year, and then a spin out of the uranium somewhere along the way. The lithium market is sitting in a consolidating. The lithium price itself, the commodity, is moving up. Hydroxides trade at 16,500 a ton. They were 9,500 a ton 7 months ago. Carbonates are at about 14,000 a ton. They were as low as 6,500 a ton 7 months ago. So you've had almost a doubling in the price of lithium. The market caught on to that early. Lithium shares had a big run up from November of last year through February or March. They're consolidating now, but I think as we get through the summer, you're about to see another leg up in the lithium prices, lithium share prices. And that's pretty well my presentation. That it's more technical and company specific. I invite investors at any time to ask questions about what I think about the lithium space, and yeah, thanks, Martin.
Thank you to you. Thanks to you, Andrew, for this very interesting presentation. And I see we have a few questions from the audience that I pass on to you now.
Okay.
The question is lithium going to be the dominant battery metal for years to come, or are other metals or technologies going to affect the marketplace?
That's a really good question. So I'm 62. My best friend is my age. He did his PhD in lithium chemistry, and he has been working on lithium ion batteries since we lived together in 1990. He will tell you that for our lifetime, there will be no other major development or major battery in use other than the lithium ion battery. And here's why. Lithium is #3 on the periodic table of elements. It's light. The only two things lighter than it are helium and hydrogen. Helium is inert and hydrogen's a gas, so it has very low energy density. For any mobile application, like transportation, cars, trains, trucks, anything like that where you need mobility, you need lightweight. If we didn't, then you would have had lead acid battery cars already for a long time. So lightweight matters. The other thing that matters is how easily the metal sheds its outer electron, because that's what causes energy, is that flow, that electron flow. Lithium sheds its covalent shell very easily. As a result, it's the perfect choice for a storage battery. There are other applications coming. There seems to be some work in sodium sulfur and zinc air. But sodium sulfur batteries operate at 300 degrees Celsius. That's not being put in a car or a truck or a plane anytime soon. Anybody that's making a big bet on vehicles that they're going to put out to the public are not taking chances on new technologies. They go with what's tried and true. It takes years to develop. So no, lithium's here to stay for a very long time. The one other part I will say to that is that there are different lithium configurations. And so you might have iron in them, magnesium or manganese in them, nickel in them, cobalt in them. That will vary, but lithium is going to be the main driver. Thanks for that question.
Thank you, Michael. Next question. Why do you think Nevada is becoming so important to the lithium industry?
You know, the Nevada Department of Mines projected a few years ago that at one point in time, lithium, at some time, Nevada will produce 25% of the world's lithium. I believe that. The McDermott caldera, a western craton of supervolcanoes in geologic time populated the sediments of Nevada with a lot of mineralization. There are, as I mentioned before, that the gold industry, you know, in the 60s, gold was being mined in narrow, high-grade veins and very little gold coming out of Nevada. Then all of a sudden the price changed and boom, 7% of the world's gold comes out of Nevada in big open pit, low-grade mines. Those same sediments host lithium. The clay stones from all these old dried up salt lakes of geologic time have elevated levels of lithium sitting at surface, and it's in a mining friendly state. You can see from the picture that's on my screen that there is very little there, and so it's the perfect spot, and the earth is endowed with a grade of lithium that's economically harvestable. So Nevada's, I think, the spot.
I see. Yes, next question. Do you have any comments on the current stock market conditions for the lithium and battery metals companies?
Yeah, so you know, that's a good question. And I'm not an expert on markets, but I've been trading markets and involved in markets for 30 something years. And the one thing I know is that investors all react together for good and bad, up and down. And so what you have is that, so the lithium market was very dead for a long, long time. You had its primary purposes were lubricants, pharmaceuticals, ceramics, steel hardening, and that's about it. And then all of a sudden, the lithium ion battery gets commercialized, and now you've got a big demand for it, and the price goes up significantly. Investors plowed into the lithium stock, into the lithium companies, the publicly traded ones, early in 2010 through 2012, but that was a small sort of level. They came in hard between 2016 and 2018. And of course, the lithium price ran to $25,000 a ton for carbonate spot by February 2018. Then we went through 3 years of a downturn because it was very clear that the supply of lithium was exceeding the demand, and that all of the projections that the car companies had made were not going to come true. And then so you had that 3-year downdraft. It finally broke out of that when lithium started to increase in price in late 2020. And that was the bottom of the lithium market. Investors plowed in fast, and you had these big runs in stock. My former company, Millennial Lithium, ran from $1.40 to $5.40 over 3 months. It's now settled back to $2.85, and now it's rounding. Look at my company, American Lithium. It ran to $4 in that period of time. It dropped back as low as $1.50 and consolidated. And if you look at yesterday's close, it was $1.85. So it's rallied 25% in the last 2 weeks. It looks like this upswing is coming again. And as we get through the summer, you'll probably see a big upswing in these lithium companies, share prices, and we'll start to see them on a new trajectory. And lastly, I'll just say that the projected supply-demand disequilibrium is going to be sometime between 2025 and 2027. That's where you're going to have demand start to significantly exceed supply, and that's going to cause some very interesting price shocks and some definite M&A in this activity. Investors will be well ahead of that. I think the next 2 or 3 years for investors in the lithium market are going to be the best yet.
Okay, let me check, but I think that's all the questions. So thank you very much, Andrew, for taking the time for our investors today. I'm sure they are also very grateful that you presented this interesting investment opportunity to them today. See you. Bye.
Thank you, Martin. Thanks everyone. Goodbye.